Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This will get everything you need to know in 90 seconds at 9 o'clock. With news China is struggling, the US is pumping, and everyone else is in between. But first up, the head of the World Trade Organization has said the Ukraine war has forced them to cut their global trade growth forecast for this year from 4.7% to 2.5% due to the impact of the war and related policies. But so far, such a turn down isn't showing up in the granular data. March factory PMIs in the Asian region show most expanding at a moderate level, and that includes Taiwan, South Korea and Japan. And although Indian imports rose sharply, Indian exports rose to $40.4 billion in March, easily an all-time record high for them and confirming global demand remains solid, although some of this could be a switch from China. And the private sector factory PMIs for China came in lower than the official version, contracting when a steady state was expected. It was their biggest fall in more than 2 years. It'll only get worse for China as they stumble on their new pandemic spread, which is high risk because they have key demographics with very low vaccination rates. And they have a second-class vaccine that is barely 50% effective. A widely locked down China will have broad trade implications. More stories are emerging of retrenchments in China, and buyers are not re-emerging to invigorate their housing markets. Elsewhere, US non-farm payrolls grew less than expected, up 431,000 in March from February on a seasonally adjusted basis, when markets had expected a 490,000 gain. But on an actual basis, 794,000 more people were employed in the month, and it is the earnings of these actual people that will drive consumption there. Meanwhile, surveys of factory conditions in the US are uniformly positive. The two main ones report good expansions. These are the best American factory conditions in decades, and maybe the deglobalization shift, because of the supply chain issues, are driving it. In Europe, their PMI slid to a 14-month low in March amid rising inflation and geopolitical tensions, but they're still expanding and at a moderate to good clip too. The US Treasury 10-year yield opens today at 2.39%, up 1 basis point from this time Saturday. And the price of gold starts today at $1,926 an ounce, and it's up $2 from this time Saturday, but down $30 from this time last week. And oil prices are down fractionally to just under $99 a barrel in the US, and the international Brent price is now just on $104 a barrel. These falls are because the US has ordered its largest ever release of strategic reserves, and other nations are following suit. And the Kiwi dollar will open today little changed from this time on Saturday at 69.2 US cents. Against the Australian dollar, we're marginally firmer at 92.3 Australian cents. Against the euro, we're also slightly firmer at 62.7 euro cents. That all means our trade-weighted index starts today at just under 74.5, but 50 basis points lower in a week. We welcome your feedback. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.